you're watching BloombergQuint. Now, 80% of Pidilite sales are from what it calls the consumer and bazaar products category. That gives it sharp insights into how India's consumers, from students to contractors, are faring. A fifth of its revenue comes from the construction and paint business, offering a view on employment critical sectors. Its B2B business caters to a variety of industries such as packaging, textiles, paints, etc. Its key raw materials are crude based, so that's a quick check on the commodity cycle. And its manufacturing facilities are spread across the world, Middle East, Africa, the Americas, and that provides insights into global economy and the trade. In short, what I'm trying to tell you is this morning, get ready for a 30-minute crash course on the economy, consumer and industrial sentiment, commodity prices, and more. As I welcome Bharat Puri to the show. Mr. Puri, thank you so much for joining us here on Talking Point on BloombergQuint, and thanks for your time this morning.
My pleasure, Menaka. Thank you for having me. Always a pleasure to speak to you.
Thank you very much, sir. We were just before this interview started talking about what an incredible year this has been. And as we wind down to the end of this calendar year, let me start by asking you a big picture question as a business leader. When you look back, what has been the biggest learning that has changed the way you either consider or look at business or strategy or any of those meaningful medium to long-term issues?
I think that's a great question. This is one of those years where all of your scenario planning, forward planning, none of it has actually come to fruition, because what we've seen is, and a lot of times we are guilty of using the word unprecedented loosely, but in this times, I think it is correctly used. I think the two things that this pandemic has taught us as organization leaders, the first is all the hard work that you do when times are good actually pays back in times like this. And therefore, building an adaptable, resilient organization, getting culture, a lot of these are softer items where people say, does this really impact this quarter or the next year's or the next quarter's numbers? And when you look back at a year like this and you say, listen, all the good hard yards that were put in really building an organization, this is the time it completely pays back, because this is the time people put up their hand, they own the organization, they go the extra mile. I can give you so many examples from Pidilite where young people have gone to contractors. One of my teams actually did a deal with Paytm and converted all of the loyalty points to money. So that because in March and April, poor contractors had, obviously if they're not going out of home, there's no earning. So it almost became like a bank account to them. Now, these were all initiatives done by the field, done by people. And another set of teams have actually gone forward. And now across our whole universe, we have insured not only just our dealers, our contractors and their workers free of cost. Saying, listen, don't worry, if any of your people, God forbid, something happens, here is free insurance for you. Now, these are all initiatives that don't come from, the corner offices. These are all initiatives that come from people who've rolled up their sleeves, understand the voices from the street, so as to say. So I think the first thing is really building a resilient organization. I think the second thing is the ability to move with speed and the ability to therefore let people at various levels decide, do things quickly. The fact that, again, when you're a trusted brand which has an all India presence, your supply chain, being able to manage that in times when everything is closed, again, requires a very different level of adeptness, a different level of agility. And therefore, this is, as I, say, this was one time where we were flying this big jumbo jet visually. The controls are not working, so you're flying it visually. And again, this is a time where, therefore, the ability of organizations to quickly pivot, to quickly change, I think these are the two things, resilience and change, which 2020 has taught us.
Has it in any way fundamentally altered the way you look at some of key business elements, for instance, how supply chains are sort of designed, or things like that?
Absolutely, yes. In fact, early on in the crisis, we realized, and one has been, and I use the words very carefully, one has been fortunate to have gone through, crises like this in the past. And that in these crises, it's important to handle the day-to-day, but it's also equally important to keep strengthening yourselves as an organization. So what we did was, we actually formed two teams, an act now team and a plan now team. Act Now just kept the wheels of the organization running, safety, security, how are people, our factories running, our warehouses open, our salespeople in touch with their customers. Plan Now was saying, listen, this is going to cause fundamental change in the market. And as an organization, we need to be the fastest to adapt to that change. I think, for example, decentralized supply chains, the China plus one, and therefore making sure that both from a raw material and a customer perspective, are you changing? The whole digitization, and digitization is not only just about, working from home. Digitization from the point of view of e-commerce. In our first 5 months of this year, we did more on e-commerce than we did in all of the last year. And we're just starting. So, whether it's digitization, re-equipping your supply chain. So you had a Plan Now team that was looking at all of that. And therefore, as you look forward, frankly, yes, while the pendulum has swung a long way, it will come back. But it will never come back to the original. It would be foolish for any of us to think that, hopefully vaccines happen, life comes back to normal, and we can all go back to being what we are. I think the world will fundamentally change. And, the digitized, connected world, the worker who can now work from home, all of these are realities that all of us have to cognize of.
True. And just one last question on this theme. You say the world will probably never come back to what it was pre-COVID. What does that mean for businesses like yours? I mean, on the face of it, you might say something like, we will increase our presence in terms of online sales, or we'll accelerate that presence, that's understandable. But deeper changes to organizational structure or supply chains, or the way you look at financials, or the way you allocate capital?
See, I think, for example, each of these areas, while yes, there is this overall theme of the digital consumer, the digital worker, the digital organization, I think whether it is now adapting your supply chains to the new normal, making sure that, for example, if you had one single big factory and God forbid it was in what is called a containment zone, you were in trouble. I mean, this teaches you for the future if you were reliant on a set of suppliers from a country that was in a problem. So therefore, the whole re-equipment of the supply chain per se becomes a massive exercise. The whole thing around your own costs, this is also given, when you've pressed the pause button, you suddenly realize that a lot of your costs, frankly, need to be relooked at in the true zero-based sense, because you've done away with a lot of costs actually out of default, out of the circumstances. And you realize actually a lot of them, you may not need them again. So the whole business of, therefore, in a sense, structuring and equipping your organization is going to be different as you go forward. And most importantly, talking to customers. I mean, my teams have been actually doing meets with carpenters, contractors now on MS Teams. Now, if somebody told me this a year back, I'd say, listen, I mean, guys, do they even have smartphones? And it's wonderful. I've actually seen some of these, and, it's a changing world, and all of us who are hoping to, keep pace with the change are going to be the winners of tomorrow.
Absolutely. That's fascinating to know that the entire trade is now digitally equipped, if I may say so. You spoke of customers. So let me come to that point, right? I've already explained in my introduction that you have a bird's eye view of different kinds of retail, trade, and business customers across the country. Let me talk about, your largest segment, which is the consumer and bazaar segment, or the retail customer, the contractors, carpenters, plumbers, all of that. We've seen, sort of from scared consumers to expecting pent-up demand to then hearing about doubling in household savings. We've been through this phase of trying to anticipate what the consumer will do next and what will be the medium to long-term change in consumption in this country. How do you read the big changes here on in consumption?
See, it's fascinating to see. And again, it's been difficult to predict, which is why you have to, in a sense, fly the plane visually. I think there are 2 or 3 big changes that are happening. One is rural and small town India re-emerging as a big driver of growth. If you remember, before the pandemic, a lot of us consumer goods guys were saying rural is actually suffering, and rural normally was 1.5 times urban, is actually becoming 0.7 or 0.6 times urban. These last 6 or 8 months, actually rural and small town India has been a very strong driver of growth. So it's very clear that It is the smaller towns, rural, that have been lesser impacted. There's also been some reverse migration.
Hmm.
Even now, as you look at it, while, progressively you're getting better and the metros have come back in a sense in the last 2 months. Even now, if you look at it from a growth perspective, it's actually inverted. It's the rural, which is the best growing. It's small town India, which is the next. It is, medium town India, towns up to, 20 lakhs, which is the next set of growths. And it's the big cities that have been the last to come back to growth. If you look at businesses, wherever consumers use their hands, wherever it is a do-it-yourself, it has come back the quickest. Whether it is shopping via e-commerce or whether it's, I have, say, a category called hobby colors, painting at home. Now that has gone through the roof, because suddenly when you're sitting at home, and one of the best stress busters is to sit with your children and actually do all of you do a painting together or do two paintings together. And suddenly we find that that's a business that has done very well. When you're at home, then your wife is going to tell you you've got all these broken objects that you haven't fixed, and therefore our very quick business has been doing very well. So obviously, a whole set of changes based on consumer behaviors. The consumer's attitude towards health, hygiene, cleanliness has changed dramatically. I think all of us will have to cognize of that. The consumer's ability now to buy, 30% of all staples, consumers who bought staples for the first time on e-commerce say that they would like to buy again. Now, staples on e-commerce is not something you would think is going to be, naturally intuitive. So I think we're in for changing times. I think we have a changing consumer. I still think consumer goods correlate best to GDP growth. So as we look back and look at a little more in the future, as GDP growth, finally the biggest driver of growth for consumer goods companies is GDP growth. As the economy grows, consumer goods tend to lead. We grow at 1.5 to 2 times GDP growth. And that's what we're waiting to happen.
But are you seeing, so what is the consumer doing right now? I know this is difficult to generalize across the country. I know you've said even at the end of Q2 that you saw the consumer in rural, semi-urban areas come back to being able to, do regular activities, and therefore, some recovery in businesses like yours. But as we stand here today, is the consumer in a mood to spend? Has the consumer gotten very, very cautious according to you? Is the consumer deferring spending? Has the consumer and his or her individual balance sheet gotten so stretched that actually they've deferred it for maybe a year or two? Can you give us any kind of micro read on that?
I think that's a good question. In fact, that's a question we've been discussing a lot. What we're seeing is the consumer is still hesitant on the big projects, on the big stuff. Okay. Things that you can't postpone, or you say, hey, listen, now it's safe to do this. So home repair, home renovation. One of the first of our businesses that bounced back was waterproofing. See, if you have a leakage at home or you have a damp wall, then that's not something you want to live with, especially when you're spending so much time at home. What we're finding is the larger projects, organized real estate, for example, in the bigger cities, bigger projects, these are still being postponed. These are still, a lot of them have come back on the planning table. A large part of the demand is individual home, individual consumer derived. It's far lesser. For us, one of the big drivers of sales always has also been commercial real estate as well as organized real estate. I think those are still to come back. Those are still, in a sense, lagging.
All right, Mr. Puri, then let me put it to you in this way, right? At the end of the first half of the fiscal, which is the end of your second quarter, I think net sales were down by about a third year on year, profit faring a bit worse than that. Do you think you can recoup most of that in the second half of the financial year? You'll have a better read because we're almost at the end of Q3, and there's been a degree of stability depending on which part of the country you look at least vis-a-vis Q2. I think the bigger question besides that, so can you recoup in the second half, and how much can you recoup? And the bigger question besides that is, when does a company like yours return to trend growth? And by that, I mean in absolute figures, because we'll start seeing double-digit growth in maybe Q4 itself or in several of the quarters of the next calendar year because of the base effect. And that will mean nothing because you'll still be actually coming back to an FY20 kind of level. So can you talk us through that?
I think if you look at the economy currently, the extent of the bounce back has actually been surprising. It's bounced back quicker than most of us thought it would. And if I look at the trend even from September to December, each month is, earlier there was this hypothesis, is it pent-up demand, is it festive Diwali demand? But what we're seeing is demand has remained fairly consistent. Again, following the broad secular pattern that I told you, with smaller town, rural being better, but metros and bigger towns now also coming back, though not, albeit at a slower speed. Having said that, Menaka, it's very difficult to look forward because, now in the last week, we now have this new mutant strain, whatever it may mean. I think as consumer goods people, if the pandemic is under control, the consumer has confidence. If the consumer has confidence, the consumer dips into her purse, stroke pocket and pays. And I think this is going to be one of those times where you're going to look at every period as a set of 4 weeks or 8 weeks and keep planning for that. You're absolutely right. In fact, starting February, March, in fact, therefore, the next quarter, the next 2 quarters will look very good from on a growth to growth perspective. In fact, as we were doing our planning for the next year, we've actually decided to disregard that and use 1920 as a base and say, listen, let's work from there.
Yeah.
Because it's if you decline 60% and now you grow 70, you're only patting yourselves on the back for nothing. So to my mind, I think the key question is, when does the pandemic come under control? Is it via vaccines? The last 3 months have been good because consumers have got confidence and it is in control in most parts of the country. Now, these new strains, these new curfews, what impacts most businesses is the lack of mobility. And once you have a fear, home improvement is something that is eminently postponable. So therefore, this is something that I think probably by March, April is when you will get a much better read, because that by then you're over this winter hump, you're over, hopefully there are a set of vaccines operating and the future looks much brighter. But I do believe that real normalcy will probably come back in the second half of next year.
Mr. Puri, let me put it this way, if I can. Given your experience of Q3, and let's assume that that is exactly the experience or an improved version of that plays out in Q4, I'm at this point in time asking you to hypothetically believe that there will be no big, large second, third, fourth wave, however you want to call it that way. And this level of economic activity will either continue or only accelerate. Do you think you'll be able to recoup much of what you've already lost in the first 6 months of the year?
I think you will recoup a large part, maybe not all, but you will recoup a fair bit. Remember,
60-70%, you'd say?
In 9 months is what you did in 12 last time. So you will not recoup all of it, but you will recoup a large part of it, because as you are seeing, demand is healthy. And what happens in times of uncertainty, Menaka, is consumers turn back to what they trust. So, the larger, more trusted brands tend to gain more in a crisis situation. We're already seeing that willy-nilly we're gaining market share without any aggressive actions. It's just by virtue of being present and by virtue of being trusted.
Yeah, that was actually one of my follow-up questions on, on market share. But I'll just come back to dwell a little bit more on, when does a company like yours return to trend growth? So if you are internally, your exercises are now looking at your own numbers vis-a-vis FY20, and you did about 7,400 crores on your top line on a consolidated basis for that fiscal. When do you come back to a number of that nature? Anything that gives you, let's say, on average, double-digit growth on that, let's say 13 to 15%, which has broadly been the average growth for you on top line over the last 5 to 8 years?
Again, difficult question. I think, let's look at it quarter and quarter, and, my investor relations fellows will red flag me if I talk any numbers, but wait till quarter 3 and quarter 4 results start coming through. But as we look at this quarter, it is encouraging.
Okay, all right. A few more specifics. So I'll sort of hat tip to your investor relations guys, but nonetheless, the commodity price cycle has turned since we last spoke to you in the second quarter. Can you give us a broad outlook on what that means for input costs? And a lot of companies like yours were able to considerably reduce operational costs, as you were pointing out in one of your previous answers. Are most of the gains from something like that done? And do we see the curve on costs now swing back upwards over the course of the next few quarters?
I think at least in the next 6 months, you are going to see substantial commodity inflation. This is because of 2 reasons. One is, globally, a lot of people under anticipated or did not understand how quickly things would bounce back. Given the bounce back in the Chinese economy, we're already seeing for some of our principal raw materials, because China's consumption has increased, global prices have gone up.
Mm.
There have also been shortages. A lot of plants that needed maintenance, so on and so forth, have taken that. There have been various issues. I actually think the next 6 months are going to see commodity inflation until, but because this is not strictly demand based on a longer term basis, I think things will stabilize in 3 to 6 months. But I do think that in the next 3 months, extending to probably 6, you will see both raw and packing material prices actually have an upward trend, because there are shortages now, and these are all, we live in a global economy, so these are all global price increases, and we're already seeing, for example, the pressures of that currently. Also, given the issues around like ports, the import-export imbalance, and therefore the clogging of ports, etc. I think managing supply chains and managing commodity costs is going to be critical in the next 6 months. But I don't see it as a long-term trend. We don't see it as long-term, because it's not that demand is suddenly going to go up by X%. It's just that people had not anticipated that demand is going to bounce back quickly, and the Chinese economy is going to grow so healthily.
So if you had to balance out some of the increases in input costs, in like raw materials, etc., is there scope anywhere else in your business to curtail costs any further, or have you squeezed the best out in the first 6 months of this fiscal? And now, you're going to have to just feed through the increased input costs, whether it's, to the consumer or through your own, financials.
See, if you just look, the last 6 months, very frankly, have been very unnatural, because on costs, even we've been very fortunate on commodity costs also.
Yeah.
They've been at all-time lows. We've always guided the market that at Pidilite, we like to keep our margin between 20 and 24%.
Right.
We've actually, in the last quarter, gone up to 27 and 28. And we've said that, listen, our longer-term objective is to remain at 2024 and invest the larger amount back into growth if we have it. Otherwise, we will price at only 60 or 70% of inflation. So we may see a moderation in the percentage margin, but hopefully, what we're going to push then is for the absolute numbers, because what you're also looking at in this period is for growth to come back. So in our belief, I would rather keep my price premiums at a 10 to 15% level, because more than that, actually, let's open the back door for lots of people to come in and focus on greater volumes rather than look at these margins, which are, in a sense, unprecedented.
So you're suggesting that you're agreeable to absorbing some of the cost pressures, and holding prices so that you can actually further expand on market share and allow for your margins to come back from that 27-28% to your guided band of 21 to 24.
Yes, absolutely. In fact,
as quickly as Q3 and Q4.
Not Q3, but it will start happening from, it's a trend, because you buy now and that raw material will get consumed in Q4. What you buy in Q4 will be consumed in Q1. So it will be a trend. And, this is again, as global supply chains crank back into action, let's see how long these price increases last also. So, it would also be unfair for us to assume that this is a longer term trend.
Okay, fair enough. You spoke of market share and market share gains. I want to ask you on both counts. Like you said, the larger companies, the better known national brands, they've managed to be able to pick up the demand faster than the informal sector, so to speak. The informal sector has also been hurt, or the smaller sector has also been hurt dramatically, or much worse than companies like yours because of the 6-month slowdown or shutdown. And the other thing that you've been doing as a business over the last several months or quarters is expanding into smaller villages. On account of all of these, can you talk us through what your market share gains have been like, let's say, as the year comes to a close?
See, there is no doubt about the fact that you are gaining market share. Very difficult right now to quantify, Menaka, because you don't have a feel as people's numbers start coming in. As you correctly said, a lot of the regional players, the little less organized players, you will see a longer period of time before you can see the impact. Really, two things are happening. One is your broader reach via having a supply chain. Pidilite has over 40 manufacturing units across the country. Now, therefore, you're able to adjust and make sure that your availability is deep and it is always there. The second is people saying that, listen, if I'm spending my money right now, let me go to a trusted brand. So whether it's a Fevicol or a Dr. Fix-It, so on. So I think very difficult to say, will we gain 2% or 3% market share? But definitely you will gain market share. Probably you will know better in the next 3 to 6 months. It's clear that you're growing faster than the market.
Okay, fine. Is that your investor relations guy telling you not to tell us what your market share gains have
I've
been
been given very strict instructions not to speak any numbers.
All right. Okay, fine. Then I think in my past experience with interviews with you, I know if I keep persisting, it won't still get me anywhere. So let me talk about your view on growth in pioneer categories, which is something that you've articulated now over several quarters. You said that you're hoping their contribution to revenue will increase from roughly 30% right now, 50% of overall revenue in the next 5 years, and your core brands then become the second half of this. Now, if these fast-growing brands or these fast-growing sectors or categories, are going to start taking up a larger portion of the revenue, once things normalize, does that mean accelerated top-line growth? Or, I think your trend growth, if I'm correct, and please correct me if I'm wrong, has been somewhere, sales CAGR has been somewhere around 8% for the last 5 years.
Yes, it will be between 8 and 10, depending on the base. Yeah. But yes, the whole objective of, in a sense, transforming our portfolio over a period of time is to accelerate the top line.
So you would go from 8% to what, sir? Let's say if things work out as you expect. If the economy normalizes and things work out as you expect.
I keep telling my teams that, listen, our targets have to be internal and we must be double-digit volume growths. I mean, for an organization like ours, if we're, with our size going a double-digit volume, then you're truly making an impact. So that's what we'd like to come back to.
Double-digit could be anything from 10 to 16, 18, 20.
See, the days of 18, 20, I think are far away. So as long as it is double-digit volume growth after that, I'd be happy.
Okay, you have about 9 new facilities that are currently work in progress. Mr. Puri, at any point in the last 6 months, have you reconsidered any of this capital expansion plan?
See, we obviously kept a close watch on it. In some of these, we said, let's wait and watch. But as the situation became clearer, Menaka, we're strong believers in the India story. India is the home market. And in a sense, we're getting ready for the next wave of growth. So as we speak now, actually, we have now close to 11 new facilities coming up.
Wow. Where did you add facilities? Which specific categories that you've spotted that you didn't earlier have?
One is natural expansion of our core continues to grow. I've always maintained that for an organization like ours, 2/3 of our growth must come out of the core categories. So therefore, the core Fevicols, Feviquicks, M-Seals, etc. of the world. So there is obviously new factories for them. We've just built a state-of-the-art factory in Vizag for Fevicol. We're then looking at newer categories. So we have factories coming up for tile adhesives. We have factories coming up for tile grouts. So a whole set of newer adjacent areas, what we call the growth and pioneer categories, we're getting set for. So that as the next wave of growth comes, again, we are ready and we have our supply chains in place to be able to capitalize on the opportunity.
Okay, so why did you add these 2 or 3 extra facilities in the core categories, is what you're saying?
No.
Where you sought to expand capacity.
There are some facilities in the core categories. There are a substantial number of them in the new growth and pioneer categories. For example, because a lot of these facilities are integrated, but if I was to say on a broad basis, 3 of the facilities would be core categories, 6 or 7 of 6 would be in new categories, 2 would be international.
Okay. You already alluded to this in a couple of the earlier answers. So, I'll just put this very briefly to you. Are there sectors in your business that have not yet shown any signs of recovery? I know that at the end of Q2, you spoke of real estate and construction, which you alluded to in this interview as well, taking a bit longer to come back to recovery or normalcy. Are there any sectors that surprised you and have yet shown no signs of recovery whatsoever?
See, everything has, in a sense, improved trend-wise, but the sectors that, in a sense, have taken the longest to come back are the organized real estate, the large projects, footwear and leather, for some reason, we supply a lot of adhesives for the footwear industry. The B2B businesses have tended to be a little slower. In B2B, it's leather, footwear, organized real estate, the large government projects are now coming back. So that's the area that has been the slowest.
Okay, that was the takeaway from the second quarter earnings as well. One final question, Mr. Puri, to you. What's the view from outside India? Because you're present in the Americas, you're present in Africa, in Kenya, you're present in the Middle East. I'm just trying to get a picture from you on how you see the global economy recovering.
Fascinatingly, this has been in many ways a surprising year, because actually globally, if you looked at Brazil's numbers, you would think that Brazil is going to suffer more than India. Actually, this year, our Brazilian business will have its best year ever. Forget the impact of COVID. On pre-COVID numbers, they're having very healthy growths. Okay. I look at the US arts and stationery business. Again, this is benefiting from the in-home trends, etc. The US arts and stationery business. In fact, actually, international has been a bright spot. The Bangladeshis of the world almost mirrored India and came back like India did. But places like the Middle East, Africa, for example, you would think Africa would be the worst impacted by the pandemic. Actually, Africa has not had any substantial impact, and Africa continues to motor along and is looking good.
So does that prompt you to recalibrate at all your deep focus on the home market and your peripheral focus on international markets?
No, in our case, we're very clear. We will first get the model right in the Indian market, and there's enough scope and potential to do that. Once we get it right, we will reapply it to all markets that are similar to India. Therefore, in effect, all emerging markets, and which is why, the SAARC countries, which is why emerging Middle East, which is why Africa, because we believe these are places where we can just reapply the Pidilite model. We're not interested in the Europes and the USs because we're not interested to compete with a different model. We know how to win in these markets, and we're going to focus here. And frankly, this is 4/5 of the world.
So anything imminent besides, I think, some of the collateral impacts of the Araldite acquisition?
No, as we speak, we're building a new plant in Kenya, which has just started off. We're looking at other locations in Africa. We have now
for organic growth, or inorganic growth?
Both. We're looking at both organic and inorganic. Inorganic in a lot of these countries tends to be difficult, but organically, in fact, if I look at my Africa growth rates, these would be high double digits over a 5-year period.
Okay, still very small base, so I won't dwell more time on it. So you are maybe putting a little bit more, emphasis on the international growth piece at the end of this year than you had anticipated earlier on. That's a fair way to summarize it.
I would say we're more encouraged by international, yes, but we look at it 3 to 5 years, and international we know is going to be a driver. It is now about, if I look at all of my international sales, it's close to 15% of my sales. So it's not so small anymore, but yes, it is something that we know has greater growth possibilities and will remain an area where we will ensure that we keep re-getting our growth.
All right, I'll leave it there. Mr. Puri, I tried my damnedest hardest to get some numbers out of you, but I should have known right at the beginning, after all these years, that I wouldn't succeed. Thank you so much for joining us here on BloombergQuint, and season's greetings to you and your team. Have a very Merry Christmas and best wishes for the new year.
Thank you so much, Menaka. Pleasure as always speaking to you. I think the best time for numbers is always the quarterly results. But in the meantime, a very Merry Christmas and a season's greetings to all of you at BloombergQuint. Have a wonderful year.
Thank you very much, sir.
Thank you.